What's up, ladies and gentlemen? In this video, I'm gonna explain to you a quick scalping strategy that you can use on gold. Now, remember, when you are taking scalp trades, it is very high risk. There, you're not gonna catch big moves, so scalping is high risk. But I've seen that this works pretty well when trading gold with it. So let's get a new gold chart running here. Okay, so let's just put the watermark off. Let's get a clean chart. So gold, where am I? I'm on capital.com. Let's use this one. Is this one okay? Yeah, this one's okay. So you can either do it on a 5 minute or 15 minute. I've seen success on both time frames. Not so it's you'll need to see which one works for you the best. So we're gonna go back in time a bit. So we just gotta go back to a random time. We're not going to look for a specific place where this happened. We're just going to go back in a random time there, right over here. Okay, so let's just start here. Okay, so I'm going to start here at the top. So when doing the scalping strategy, I actually want you guys to follow the trend. Okay, don't don't go against the trend. Stick with the trend. Remember, your trend is your friend, okay? So basically what you're going to wait for is, let's just do that. So you're going to wait for price to start consolidating, right? You're going to wait for something like this to happen. You're going to wait for prices to establish a range, basically, like that. And you're going to draw a box over this range, okay? You're going to draw a box over this range and you're going to wait for price. Let's say price is in an uptrend. You're going to wait for price to break out of this range, come down, retest the range, and then move in the opposite direction again. Okay, that's basically it. So it's not rocket science or anything like that. So let's head over to the candlesticks. Let's go to the charts. Let's see what we can get. So right here, if we're looking at the charts here, we can see price is moving in a downwards direction, so a bearish market. So now we're going to wait for price to establish a range. Okay, I'm currently on the 50-minute time frame. We'll go over a few examples on the 5 minutes as well. If I have a look over here, I can see that price form the range over here, so you can see which one works for you the best. I like to include the wicks sometimes, so as soon as price breaks out, so some of the people will include the bodies and they'll take that as a breakout, but I want to see a break above those wicks as well. I want to see price break out of this range. Okay, so theoretically I'll draw two boxes in here. I'll just make life a bit easier for myself. I'll just draw two boxes in here, so I can see the outline of the wicks and I can see the outline of the bodies. And you can see here price, right? Price moves sideways, 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 sideways. And then what did price do here? Price broke out of the range, closing below it and moved into it again. So that is where you will look for your sell opportunities. Okay, so that's about I don't know how to read this chart. So that says 160. So we'll go down to a lower time frame, but you'll look, if you trade ICT as well, you'll just you'll place your stop loss above that, and you'll just target lows or whatever, something like that. So let's look at a new box being formed. So a lot of people will see this right here as a box, right? And then they'll say, no, but listen, price broke to the upside. Hold on, wait a minute. Let's take our buys, let's take our buys from this right here. You can see tap the top of the box. So they're running about 40 pips, 50 pips in profits, and then price stops them out. So you can do that. You can do that if you're not scared to risk, not scared to risk your cash or your money or whatever your account. You can 100% do that. But for me, I would wait for price to break out to the downside again. Okay, I'll wait. So I'll take this as a fake out, basically. I'll take this as a fake out, so we can delete that box. You can see we have a new range being established right over here. Right over here, you can see there's a new range being established. And what does price do? Price breaks out. Price breaks out, right? Move to the left-hand side. There's your entry here. So you would have had some drawdown here. That's where that ICT or SMC or whatever you trade comes in. Support and resistance, doesn't matter. That's where that comes in for just for better entry within this box. You can see we've caught a nice entry here. Not a lot of pips. It's like I said, scalping is not to catch a lot of pips. Scalping is just to flip small accounts. So you would have stacked in here or somewhere here at this order block or liquidity sweep, whatever. You would have stacked there and you just would have sold off price right there. And so there's two examples that I can see here on the 15-minute time frame, right? You can see we have another range being established over here, right over here. So if this market was to turn bullish, right, you can see you can actually have your change of characters or whatever, something like that. You do have you get your change in state of delivery telling us that the market wants to, push into the opposite direction. And you can see price actually broke out over here. Wait. Okay, so that's a pretty shallow break. I wouldn't consider that a breakout. So I would have still said, listen, no, price is still within this range. Price is still within this range right here. And here, price broke out, right? Price broke out over here and giving us a clean break, strong body, strong candle over there. You can see the body of the candle is quite big. So, and then you can just like enter buys here. You probably would have secured here. You would have bagged, first you would have bagged 670 perps, so that's not too bad. And then you move on to the next box, right? You can see here is another similar box being formed over here. You can see what this price do. Price breaks out, nice clean break. And where's my entry? Right over here. Stops, I don't know where you would have placed your stops. My stops would have been below this low. And I would just ran it up. That's it. That's pretty basic stuff. So let's see if we can find another example on a 15-minute time frame. Then we're going to head over to the 5-minute time frame real quick. So let's look for something in this direction, right? Something in this direction, okay? So you can see here, once again, price broke out of this range, but that's not a clean break, right? That's pretty weak. So I'm just gonna expand my box to the top of that wick, and right over here you can see price gives us a clean break, breaks above and trades above it. And then you can draw your box to the right hand side. You probably, if you were impatient, you would have entered there. You could have caught some buys over there, but initially you would have only entered down here. Yeah, and you would have caught roughly 180 pips. So that's still quite a lot. I mean, just for scalp trade, just entering on the retest of a consolidation zone, that's still quite a lot. So let's quickly head over to the 5-minute time frame. Let's quickly have a look there. So looking at the 5-minute time frame, okay. So now we're on the 5-minute time frame. You can see, right, we have this same thing, downwards range. Oh, sorry, not bearish market happening over here, right? And let's go here. So let's see if we can identify a range being established over here. So you can see here's your range right over here. That's more or less, and you can see price literally faked it out to the upside, right? So basically grabbing this high to the left hand side, stopping out all those buy stops, coming back into this range. And then what this price do, breaks up to the bottom and then trades below it. So you would have caught an entry right over here, bagging roughly 50, almost 50 pips, which isn't too bad. Once again, it's a scalp trade, so you're not expecting a lot. I mean, it's a scalp trade. You can't expect a lot from a scalp trade, Let's go to this example right over here real quick. So if I take this over here, right over here, okay, you can see price has been moving sideways within this range, not taking out highs. Initially, you would have only seen this, right over here, and you would have said, no, but wait, price took out the highs, trading above the highs. I must put in my buys. No. Why do you want to put in buys? We're in a bearish market, Only time when you want to put in buys is when the market is bullish, right? So this would have been your initial box right over here. And then you can see price broke out of that box, out of this level. And then it does do a pullback, but it never comes back to your entry, so you would have not caught this entry, which is unfortunate, but it's okay. Pardon me. So let's have a look over here. You can see here's another range right over here being established, right? You can see that. You can see price is trading within this range, not taking out lows, not taking out highs. Well, taking out highs, but it's still closing here. Still closing in. If you wanted to, you could take it from that if you wanted to. I would have taken it from there. You can see prices coming in, taking out highs, taking out lows, just staying within this block here, not doing much. And then finally we get that breakout, and then we start trading below this. And what does price tell me? We are bearish, so we're supposed to, look for sells. We're gonna move lower. You can see we took out this low, closed below this low, so we got a new lower low being formed. Yeah, so what can we expect? Lower high, and that lower high comes up and it forms at the retest of this thing here, and you would have bagged roughly 70 pips if you didn't secure your trade. You would just let it run, and you would have actually bagged even more. Personally, because it's a scalp trade, as soon as I saw price take out this low and not closing below this low, I would have most likely closed out 90% of my positions and secured the rest. So I would have been stopped out at break even, but that's no problem for me. Okay, yeah, price is just shitty over there. Okay, let's have a look. Let's quickly have a look over here. Here's a good example again. Okay, you can see that price is bottom. Price formed this range over here. Okay, what does price do? Price moves up, closes above. Okay, now you get your idiotic traders again, and they're like, price broke out, took out the highs, let's buy. No, don't look at that. Where is price moving to? Price is moving bearish. So what does price do? It taps those buy stops in, it triggers them, gives them some profit, and then sells off. Takes out their stop losses or their break evens, whatever. I don't know how they trade. Comes down, trades below this level, and there you can see price moves up for that retest, right? Price moves up for that retest right over there. I don't know where you would have placed your stop loss. I would have placed mine there, just above that high, for in case price wants to, just move up, tap that order block, or then move down only. So I would have placed my stop loss there, and my TP would have been at this low, which is roughly 100 pips, which isn't too bad at all. But yeah, that's basically it, guys. It's really not that difficult. You just wait for a range to be established, and you just continue trading into the direction of where price is currently heading to. I think there's an example of today, right? Yes, right here, right here. So this is what happened today, right? There was this range right over here being established, right? You can see there price trading from top to bottom, top to bottom, top to bottom the whole time. And then what does price do? Price breaks out, right? Price breaks out of this range. But market isn't bearish, so I'm not gonna look for sells. Market is bullish. We got that change state of delivery right over here. And so you get your sellers entering, you get them excited and everything. But if you look closely, you can see prices more or less, establishing another range over here. You can see you get that fake out. So you could have entered there, and then you get that clean break right over here. We can delete this right now. That's no longer necessary. I was a trade-off today. You can see price gets that clean breakout, comes down for the retest, and then buys up from that. Pretty basic stuff. Pretty basic stuff, right? There was another thing that I saw, another example actually, that you could have used, right? So let's say, for instance, we have this range over here, right? We have this range being established right over here. You can see price broke out, traded above. So on this one, you would have taken a loss, right? But it's like I said, it's scalping, it's high risk. So right here, you would have taken a loss. No doubt about that. I would have also taken a loss if I took that trade. Moving on, you can see price formed another range, right over here. You can see candles are taking out highs and lows, but not closing above them, not trading above them, nothing like that. And you can see here price does go up, closes above. You get that retest, a bit of a deeper retest, probably tapping an order block, fair value gap. I don't care. I'm looking at that right now. So you could have entered here, right? You could have entered from the top of that range, and you would have caught, let's say, because that high only went down there, you would have caught roughly 46 pips, which is still enough for a scalp trade. Don't expect miracles to happen. It's just a scalp trade. You're not gonna catch. The chances of you catching a move over 100 pips from a scalp trade is 95% less likely to happen. So take your 30 pips or 40 pips that the market gives you. It is a scalp trade. Don't expect miracles from a scalp trade, guys. That is not going to happen. But yeah, that's basically it, guys. Pretty basic stuff. So I'll see you guys in the next video.